USB video. Boom, boom, boom. Alrighty, let's go, ladies and gentlemen. Just throw this video up. Let's go. Now I gotta change it. Flip it horizontally. What is up, everyone? How are we doing? Just give me 1 second while I flip you guys around. Hold on. Yeah.
Rader, why don't you start your streams off more professionally? Rader, why don't you go and do things?
What up, everyone? Hold on. Give me a second. I know I'm on this side. Give me a second. Everyone. I totally forgot to flip my camera over from Trader TV, so we'll see, because they don't like me doing vertical, obviously. But I like doing vertical because, well, I think it's more fun, so that's why I do vertical. Okay, there we go. Then we just equipped the battery. Boom. We should be back in business. Oh, yeah, baby. Now we can just size this up. Look at this. Look at this. Boom. Look at this. So good. What up, everyone? How are we doing? Everyone in chat right now, what's good, everyone? We'll get a little hype session here. Copyright free chill. We'll play some of that. Let me straighten this out a bit. There we go. All right. So you guys are absolute legends for being patient. Thank you. All right. Let me go get my headphones. 1 second, guys. All right, ladies and gentlemen. Corny intro. All right, so don't make fun of my skinny legs, okay? I'm 6 foot, highly athletic, okay? I can jump over a house, okay? No, I'm kidding. What up, everyone? Hope we are all doing wonderful today. Wow, do we have a lot of things to talk about. The markets have been absolutely crazy, and we are going to find a lot of trades tonight over the course of the next hour, and we are going to discuss some very important topics, including what I believe to be the next moves in the market, how we can prepare for it as traders. Whether I'm right or wrong, I have to prepare, and so I'm going to give you what I believe to be the most effective preparation plan, and of course my edge with that. So that's that. So if you guys are already in the chat, please do me a favor, hit the like button and comment down below. Okay, before we start, I always like to do a little tradition, a little icebreaker, if you will. Comment down below what your favorite beverage is other than water, and you can't say alcohol, okay, and you can't say lean. None of that, okay? What is your favorite beverage outside of water? Raiders bathwater. So we just, all right. So we need to ban some members in chat here. All right, everyone. Well, regardless of what Mr. Wealth District says, great start early. Hey, what's up, Demi? Yeah, I started early tonight. I stayed up till 6:45 last night, so I didn't go to bed till like 7, and I got up at 9:30. So, right at market open. So, I am running low on sleep per se, but we did it because last night, of course, we're gonna talk about this right now. Last night was the market crash. Now, one more thing, I do need to tweet this out. So we need to tweet out that I'm live. And then we will do that. Actually, no, I'm not going to tweet out that I'm live. I'll just keep it to you goobers in here. But this weekend is going to be absolutely insane, and I'll tell you why. This week is going to be. Last night, I stayed up extra late, 6:45 a.m. Again, I was locked in last night, writing the Rader Report. We'll go over some of those trades today, as well as my philosophy behind them. My goal of these streams is to both educate you guys, but also prepare you guys. Ultimately, I do want you guys to not only know more, but apply that knowledge and see it being applied in real time and through a professional manner. So that's going to be our goal tonight, is to just go over a few things there. Now, specifically last night, the markets, as you guys may have seen, they had one of the biggest crashes in a while. Now, we say crashes just because it happened so fast. Was it the biggest magnitude? Absolutely not. But certainly across the board, I mean, almost $10 trillion just left the market last night. And by open today, of course, that has changed. Things aren't looking so bad after all right now. But we still have a lot of major mega caps down. We still have, 4 or 5% even. And the question is, where are we going to go next? That is my plan that we're going to answer tonight. So you know what? I am going to tweet this out. I changed my mind just because my Twitter has been getting pretty active lately. So we'll do that real quick. So just bear with me for about 20 more seconds, and then we'll get started. You trade options or futures? Brandon, I do trade options, sir. Okay. There we go. Boom. Okay. Let's see who else needs coconut water. Dude, coconut water is so good. I forgot about that. I remember having that not too long ago. Okay. Just grab a link to this stream real quick, guys. Thank you for being patient. And then we'll get rolling here. And I'm also going to show you guys how to chart and how to kind of navigate in times like this. So tonight's going to be really informative for a lot of you people because this stuff doesn't happen very often, okay? And that's why you guys got to share the stream, like the video, and do all the corny, cliche YouTuber things. You know what I mean? I did also turn off monetization on my streams. I figured out how to do that, so you guys won't get those annoying ads anymore. All right, guys. Thanks for your patience. All right. So who is ready? What's up, Abstract? How are we doing? Who is ready in chat? I need to see some yeses. Who is ready to talk about the markets? Look through the markets. Are we ready? Are we asleep? Are you guys actually ready to lock in? What is going on? Type locked in chat. Type yes, something. Let me know that you are ready to actually focus on the markets. If you're taking a dump, whatever, I guess. But I hope you guys are locked in. I feel like you're in go in the trading space. You're in go in OG in the trading space. I've been here forever, man. As young as I am, I've been active in the markets for a few years now. My teachers are very professional. I met them in the Bay Area, and they kind of trained me throughout my entire high school. I kind of sacrificed my high school for this stuff. Graduating college now, online. I've done a lot, but one of the biggest things was, you're absolutely right that I guess the way I teach, not the way I teach, the way I express myself and the way that my ideas are presented, They're very professional, and I'm very blessed to have the people in my life to tell me what that is. But all right, let's go, baby. So to start off, what we're going to talk about right now is, of course, the SPY. Okay, where is the SPY right now? How did we get here? We do all of this every time we do a big summary. So what I'm going to do is I'm going to mute this up, and we're going to lock in. So as far as how the markets got to where they are today, there has been a big snowball rolling right now, and a lot of people think it's the Fed. A lot of people think it's this, fears of recession. They're pointing to all different sorts of things as to why the markets are dropping. In case you guys don't know why the markets are dropping, let me fill you in, okay? And we're actually going to do this by pulling up the Rader Report here. Just one second, and I'm going to go show you guys the cover letter of our last one. Boom, boom, boom. Okay. So this week on the Rader Report, I talked a lot about what was going on in the market, specifically relating to Japan and the recessionary fears in the market right now. There's two major factors of why the markets are crashing right now. Number one, you have the fears of recession and the monetary policy with the Fed. Number two, you have Japan. Now, the Japan catalyst, if you will, is more of a mechanical response rather than a sentimental one. It is more of, by sentimental, I mean emotional, whatever. But this is a mechanical response. So if you don't know what has happened in Japan, let me explain it right here, okay? So last night, I kind of posted this real late last night, but it was before market open. A lot of you guys should know this already. But basically, and I'll read this out to you just because I already wrote this out, so I'm going to write it out for you, or read it out to you now. It says, over the past 5 years, Japan has had virtually no inflation. Thus, they kept their interest rates low and devalued their currency to combat deflation. Okay, so Japan had really, really low inflation, and to combat this, they devalued their currency. Okay, and of course, they kept low interest rates. And with that, they could use this. So over time, through this period, many international investors would go to Japan and take loans out. All right. So during this time, over the last 5 years, Japan has had this very low interest rate period. Okay. Unlike the U.S., where we've been, of course, raising interest rates, Japan has had no inflation because they've been combating it. People criticize them, said more effectively. It's however you count on it. But do you consider a crash more effectively? We'll see about that. Now, how does that happen? Well, when you have such low interest rates over there in Japan, it attracts international investors because what they can get is they can get cheaper money, free money, right? If they can get a lower interest rate on that amount of money and then come back to the US with that money and put it in bonds, stocks, asset classes like this, then what they're doing is basically arbitrage. It is basically get cheaper money over here, put it over here for the same kind of value, and increase it in size. The problem with that over the years has been that the expectation of a rate hike or even a cut in, of course, our markets, Japan, I'm trying to say this in the most clear way because it gets a little confusing, but basically Japan's expectations was that they would have to increase interest rates because they've had negative to flat interest rates forever. And so as they increased the interest rate one time, it spooked everyone. They're like, holy shit, the markets are going to go to zero. I got to pull my money out of this Japan thing. And then they hiked it a second time, and that's what tumbled the markets today. It tumbled the markets not because everyone's, it's still cheaper interest rates. It's still cheaper loans. But it spooked everyone because the expectations of more hikes in the future is there. And what they were doing is losing money on both sides of this trade. They called this the carry trade. Okay, and the carry trade was, again, that they would take money out of Japan at a loan at lower interest rate, put it in the U.S. interest, into assets, bonds, etc. So hopefully you guys all understand that. Now, the expectations, of course, with those rising interest rates, they're not only losing money over here in Japan, but they're also losing money over here in the U.S. because the Japan yen is now increasing in value in currency, which, of course, devalues the U.S. dollar compared to it. All right. So the idea is that they were losing money on both sides of the trade. Does that make sense, everyone? Does that make sense, everyone? And that's why you saw a lot of spook. Now, why do I say that's a mechanical reason? Is because firms are leveraged and therefore they're going to be getting out. And when one big firm pulls out, it creates a snowball of just who is racing to not get margin called next. Okay, so they saw this like, oh, let me pull my money out. When they pull their money out, that creates more selling pressure to then have the other firm pull their money out. So it's just a big snowball, and that's why you get these rapid changes in price. Okay, so hopefully you guys are all up to speed with that. Again, you can take a screenshot of this, read it later, but I typed it out right here. Okay, so that is why the markets have been really, really spooked. Now, what is the future of this market? What is the options market telling us, and how do we freaking trade this? First of all, we have to look at a few different factors. Number one, we have to point our nose to the derivatives market, the options market, to see what is it telling us and how can we actively position into this market most effectively. The options market right now, of course, is going absolutely crazy. This is the VIX right here, and it did pump all the way up to nearly 60 today, which is absolutely bonkers. This is the VIX, and again, remember that VIX, ticker VIX, and I should probably put that setting there. Let me do this real quick, just so you guys don't get confused what I'm on. I don't know how to change this. This always confuses me. Name. Okay. So the VIX right here. Right here is the VIX. Now the VIX is the measure of options premium in the market. A lot of people call it the fear index, but I want you to understand that fear doesn't really quite correlate well with what we're trying to get out of the VIX. The VIX measures how expensive insurance is in the market, right? The higher the VIX, the more expensive the option premiums are, because typically the higher the volatility. That is why it is called the volatility index. Okay. Now, why would insurance be more expensive when markets are more volatile? Well, it's because, if I buy a house down there in Florida, my hurricane insurance is going to be obviously more expensive because the odds of a hurricane coming are, well, greater. So it makes sense that in more range markets, more volatile markets, that insurance is more expensive. But we have to remember that when the VIX spikes, it is a measurement of current, but it is not a prediction of future. However, when you get to such big readings on the VIX, it marks a change in dynamic for the market. What do I mean by that? When you see such a large spike in the VIX, you have to see an extended period of time where the market's option premiums stay elevated. Why would you want to see that? Because the longer these premiums stay elevated, the more we can start to establish that a market bottom is soon. Because what's happening here is that when you have a market that is elevated so much, if we're thinking that we're getting near a bottom, we want to see it elevated for a longer period of time, which it is. Mechanically, it typically does stay that way because the market makers are going to start making a lot of money with theta decay, with a lot of money with contracting ranges. And by them, making these bigger moves, but ultimately contracting ranges by the end or the expirations, they're going to be killing a lot of premium. This is called premium theta decay. And this will kill the VIX, okay? So if we want to see when a market bottom is near, we want to see the VIX stay elevated for an extended period of time before crashing. And you can see this almost every time with the VIX. Before you want to see some sort of bottom, you want to see an extended period of time when that is elevated, when the premiums are elevated, because that is where you start to see the most money being sucked out of the markets, and eventually that takes a tipping point and bounces the market. Okay, so this right here, the VIX, this we want to see kind of stay elevated for a little longer. Okay, so as far as the options market right now, the pricing in the options market, I suspect that we will maybe have a drop and then another pump in the VIX, but ultimately we expect this to stay elevated for some time. All right. So additionally, what else can we see in the market? Well, if we go look at trading volatility right now, we can go look at the options chains. Now, one of the most important options expirations is coming up August 16th. This is one of the big ones. Over the course of the last few weeks, you guys have been listening to me say that I believe that 520 is the market bottom. Do I still believe that? I'm not sure. I'm honestly taking the stance that we do go lower. But as of now, we can conclude that at least this is the wave 4 bottom. Okay? And I'll get more on that later. But right now, the huge option walls are focused in and around that 520 level. Again, you can see this 111,000 open interest for the 520 strike on SPY. Remember that puts in the market create massive support areas, okay? Puts in the market are support levels. So when you see massive areas of puts right here, this creates the kind of an environment where a market can bottom. Now, let me be very clear. A lot of people are saying, okay, now as much as the drawdown as we're getting, a lot of people are saying that the markets are overextended, that there's too many people long, that blah, 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 blah. While they're saying that, that's not true. There actually is not that many people long, at least from the options market. Okay, and the options market is one of the biggest tellers. So right here you can see, I mean, there's virtually no calls anywhere. It's just stacked puts, okay? But what we want to see is the continuation of that building of these walls. We want to see people continue to short, continue to pile into shorts. We want to continue to see that to justify a market bottom. Why? Because if a market is shorted heavily, if a market is hedged, then a market can mechanically not crash. If everyone in a market is hedged with puts, a market can mechanically not crash no matter what the news is. Okay? So what we want to see is that when this comes around, that if we want to see a bottom in the market, we want to see these put levels continue to grow. We want to continue to see further expirations into September continue to grow. We want to see, okay, are people still spamming puts, whether it be a near term or longer term reversal? This is what we want to see. Okay. So my thesis right now is that 520 level that we're seeing right here in the options market, again, I believe that this will be the bottom of wave 4, but it is very possible that we make some sort of eventual dive to just before 500 or lower, maybe into September. Okay. Now, could this 520 be the bottom for August? It could. Right around here could be the bottom for August. That's absolutely a possibility, right? We could see a liquidation down to 515 and below, and then see an eventual close above 520 by the month end. We'll have to see. But right now, I believe that 520, somewhere around here, is going to be a decent trade that we'll talk about later. Okay? Is everyone clear so far? Is everyone clear so far? Type yes in chat if you were staying with me, if you were locked in, if you understand what I'm talking about. If not, do not be shy to ask questions. Yes, yes, awesome. Also, welcome, Tim. I hope you're doing well, man. All right, cool. So you guys are awesome. All right. So with that being said, taking a look at the options market there are huge, massive put walls being stacked. While I don't think that this is going to be some, buy infinitely off 520, again, remember my thesis. If we can just go briefly look at this chart here, I will show you guys. Hopefully you guys will remember this chart. But last week, okay, I've been talking about this chart. This has been kind of the chart we've been referencing for the last few weeks now, okay? And what I said was that we were basically here. I believe that we were in wave 4. Now, I want to talk about this because this is one of the most important things that anyone can really think about. Is that you guys may have seen on Twitter and stuff, me posting this chart, even Instagram on my story, I was posting this chart a ton. A lot of you guys have to understand that whether I'm right or not about the bottom, and you'll see this. A lot of people on social media, next time I go on Trader TV or elsewhere, I make it a joke to say, trust me, bro, when I go on Trader TV, when I post these things. It's a joke, and of course, because, the source is me. I literally make this stuff with my mentors, and there's no other data. Some of this stuff is unexplainable other than the fact it's from experience. But what I want to say is that a lot of people are going to hate on me for not guessing the bottom, but what they're not going to say shit about is they're not going to say anything about how we nailed the top and how that we traded all the way down and we made money. Remember, guys, being a trader, it's ultimately not about being right or wrong. Who gives a crap? What matters is, did you make money from the plan that you made? Okay? And can you continue to make money from the plans that you continue to make? It does not matter whether I nailed the bottom or not. What matters is, did I make money on the way down? This tool, this chart I made, was merely an expectation building tool. We saw an Elliott wave cycle. Sure, let's continue to short wave 3. You guys knew that I didn't fall for that 523 top. I didn't fall for that fake out. And you can see all over my Twitter me posting that. I continued to short these names because I believed we were still in wave 3. And even this week, I said that I believe, seasonally speaking, we'll get to this in a second, I believe that seasonally speaking, we are in a wave 4. All right? So we'll talk about that in a minute. All right? While these levels may be off, the structure I still believe is somewhat there. Do we have to adjust some of these time frames? Absolutely, but we will get to there when that time comes. Okay? Nah, your CrowdStrike call was amazing today. People can't say anything. And there you go. Right there. I mean, yeah. We'll talk about that in a minute too. Those names are going to go nice. So with that being said, this chart right here, I want you guys to understand. You guys will hear all over social media. You'll hear people say, look how right I was. I predicted the crash, blah, 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 blah. You'll hear guys yap, 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 flap their gums. Their gums will just be flapping like this, okay? They don't trade. Okay, because the people who trade are the ones that are talking about it, are the ones that are supporting their ideas with data, not just drawing random ass doomsday predictions and calling it a day. Those guys are all clowns. Okay, I've seen multiple people on Twitter saying, blah, 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 and, look at my big, it's just stupid. Okay, so hopefully you get that. But this chart right here, we will slightly change that. Now, moving away from the options market, I do want to highlight one thing as well. The PCC, or the put-to-call ratio for equities on indices, okay, equities and indices right here. This measures how many puts, the put-to-call ratio, so puts divided by calls. If it's puts divided by calls, right here, that means the higher this number is, the smaller the denominator. So if we have 2 puts, you get 1, or maybe 0.5 of this, it's going to be a higher reading, okay? So when you have more puts in the market, this would go up. You can use PC or PCC. Now, what you want to see is, like the VIX, you want to see the PCC or the PC stay elevated for an extended period of time. And I believe it will. Naturally, when markets do drop, you will see puts in the market increase. But PCC right here, this is a great tool. When you start to see this hold elevated levels for an extended period of time, it's going to create very tough environments for the market to continue to drop. Why? Because again, if everyone is hedging, markets are going to really struggle to drop because market makers will be forced to buy up off of this put spamming. Okay? So you want to see this continue to stay elevated for a while. Do I think we're at a bottom quite yet? Not quite. No. All right, now moving away from that, what we're going to look at next is the seasonals. Okay? Now we've been talking about this for a while now. But the seasonals have been one of the biggest predictors that I've used to kind of build and forecast a plan in the markets. Specifically using the tool on the RaderReport.com. This is the custom seasonal tool that I built with my buddy Yashun, who's been an absolute great helper in making this website. So as far as what this tool shows, it does show the average historical price tendencies of the market during certain times of the year. So traditionally during, July and into August, this is one of the strongest months. You can see this by both the degree at which that line is angled, but also how consistent this trend is, right? Versus something like here, which is, April, May, very, very choppy, very, very inconsistent in trend. Okay. But as far as this, we nailed kind of that seasonal top. We said, you know what, sometime between the 25th and the 29th, somewhere around there was going to be the top. 23rd, and you can even see typically the 23rd is actually the seasonal top. If I can kind of zoom in here, you can see literally on the 23rd is often a seasonal top. So is it a coincidence that SPY dropped on the 23rd of the July right here? It is absolutely not a coincidence. I'm sorry for that. So this was the 23rd of July. This is not a coincidence. The markets tend to set a seasonal top there. And again, that was the basis of our thesis right here and why we would see a top. All right. So that's that. Now, what are the seasonal expectations right now? Well, the seasonal expectations right now are actually that we continue to chop upwards. And again, this is the thesis that I've had of why I believe that we are somewhat in a wave 4 structure. I did not want to short this week. You guys remember me telling you on Twitter, Instagram, whatever. I did not want to short this week, and even on Trader TV, I did not want to short this week because seasonally, when you get these big drops, especially as an options trader, the risk to reward is just not there. So in a time like this, if we were to say, and I'll get to Mr. Wada, why I wanted that CrowdStrike, which was an awesome trade today, by the way. as far as this right here, I believe we are somewhat in this structure right here. We are in somewhat of a wave 4 structure. Now, is it actually wave 4? I don't know, but what I'm doing is I'm going to continue to play off of this chart until August 16th, okay? And a week after August 16th, okay? I don't have any reason to invalidate this chart yet, other than the fact that, potentially we could be in a longer wave 3 than we're anticipated for. But regardless, the trade ideas are still there. Now, the seasonal expectations state that we do tend to see somewhat of a bounce into around the 16th of August. Now, there is typically a drop right after the August 16th expiration date. All right, so we're going to have to watch that. But I believe that a bounce into the August 16th expiration and then a drop slightly, 1-2 days before, and then a sell-off after is what we're going to do. All right, so the seasonals right now say do not short. They say we're likely going to consolidate. We're likely going to chop. We're likely going to create trapped volatile ranges. Although, remember, the VIX is elevated, so these ranges are going to be bigger than normal, but they will be somewhat of a consolidation, if you will. All right. Typical structures for wave 4s, if we do draw a 5-wave cycle, is that if this is going to be, if this is going to be wave 1, this is wave 2. If this is wave 3, you can expect some sort of triangle from wave 4, and then a wave 5 liquidation before you see the rally back. But this typically, the structure typically forms some sort of box or some sort of triangle. Okay, so this is what you can expect from a wave 4, some sort of triangle, some sort of box, some sort of flat consolidation, something like that. That is the typical structure of a wave 4. Okay. All right. Type in chat right now if you guys are clear with where we are at in the markets. Are you clear with what I'm talking about so far? Type yes in the chat if you guys are good. If you have questions, let me know. But I'm trying my absolute hardest to explain these things in the most simple manner to catch you guys up. Yes, grande, yes, hell yeah. Okay, cool. So, also glad to see all you new members here today. I'm very thankful for everyone here tonight. Hope you guys are all doing very, very well. Would that be considered a complex wave for wave 4? Not really. I mean, by complex, if you mean a sub wave, so you have a 5-wave within the 4-wave or vice versa, I'm not getting too deep into waves. Right now, the most profitable thing for me right now is to just trade the general idea, because the micro specifics are going to be very tough to time. But that's that. Yo, Rader, in your Discord, do you teach about RG chart and options order? Reed, I am not self-taught. Absolutely. We do have a lot of material on both relative rotation graphs as well as how to properly read the option flow. Additionally, we do have even custom terminals within our strategy that we use, such as the Eii Tracker. This right here helps me track option flow, how much it's down, how much, and this is for our students as well, how much it's down. You can add flows, track it. It shows you where the nearest put wall is, the nearest call wall, etc. And so that's a really cool tool. We're professionals, man. We do not take this stuff lightly. It is not a come in and copy alerts and make money. It is a very professional environment. But yes, we do have a lot of information on that. Now, moving forward, since you guys are all up to date with this, the seasonal expectations say that we do continue to chop. And that was the basis for many of you that watched that Trader TV clip, or even my appearance last week on Trader TV. That was my thesis of why I wanted to pick the certain trades that I did. Now, on the, and screw it, I'll just, for learning experiences, since you guys do it, I'll just show you the Rader Report this week. A few different trades came to mind, okay? And a few ideas brewed, okay? And I'm going to try to explain this in the best way I can. But essentially, whenever you reach a wave 4, okay, and I'm going to quiz you guys to see how knowledgeable you guys are, okay? So right here, whenever we get into wave 2 to 3, what do you guys think is the best short in the market? The leaders or the laggers, okay? When we get to wave 2 into 3, what do you guys think is the best short? The leaders or the laggers? Type in chat. What do you guys think? The leaders of the trend, and if you don't know what that means, leaders means the outperformers, or the laggers, which means the underperformers. What do you guys think? Leaders, laggers? Leaders. Okay, you guys are absolutely right. So one of our big trades that we took, or at least that I took over the last month, was URI. So this was a wave 2 to 3. So if we go back to that chart, this chart right here, when we started to come up to here, the trade I took was one of them. The trade of the month on the monthly was, sorry, it's a big report, man. One of the trades of the months was this right here. So this was a home builder trade on URI, short for 830. Home builders have been the leaders of the trend. And to prove that, let me go to Koifin. Okay, I'm just going to exit out of everything. Never mind. We're going to go to Koifin here. Boom. We're going to go to market dashboards. We're going to go to US sectors. We're going to go to here. We're going to do July 24th. Sorry, July 17th. Boom, 7/17th, and we're gonna go to 7/23. Okay, so when I was deciding to short home builders, I not only saw an option flow, but right here, this was your leaders and laggers for specifically this time frame right here. So what I'm comparing is the performance of different sectors from the 17th to the 24th. Again, when I was making this report, or rather when I was looking at these kind of things, I make these typically a week after the major expiration. And right now on the 23rd, this was like when I was like, okay, we're going to short home builders on the 23rd. Again, referencing this chart, this was kind of my thesis, is short into 556 and catch a big wave 3 down. All right. I decided to end up shorting home builders. Why? Because they were the leaders of the previous trend. When you expect an extended period of sell-off, the harder sell-off, which is wave 3 of an Elliott wave cycle, the markets will rotate out of, and this goes for any big market drop. When you expect a sell-off, whether it be a seasonal period coming up, something like that, you want to short the leaders of the trend. Why do you want to do that? Because they are going to get rotated out of first. Okay? Excuse me. We saw this. Semiconductors got absolutely clapped. Home builders, right here. This was what we were looking at. This was the exact chart I was looking at. Technology, home builders, regional banks, these type of names, I wanted to short because they were the most extended. All right. So you short the leaders. Great job, guys. So when we go down and we start to tank, okay, and we start to go down to, I apologize. So when we start to tank, we come all the way down here, okay? We were trading in and out of this. Great, all right? When you come down and you expect a wave 4, the trade is obviously to the upside. It is not really shorting anything. So what do you guys think is the best long? The leaders or the laggers? Let's see what you guys think. Type in chat. What is the leaders and the laggers? What would you long? So we caught this short trade, but now that we're expecting some sort of wave 4, which is again a box or a consolidation in the overall markets, would you long the leaders or the laggers in the market? The higher you are, the harder you fall. That's right, Demi. Laggers, awesome. Okay. So the reason you long the laggers, the reason you long the most beaten down names, all right? The reason you long these type of names is because they get the most aggressive rotation. Think about it like this. When the markets start to crash and you have the overall market starting to consolidate, money is not really doing much. It's equal buyers, sellers, if you will. When you have that, the overall markets are chopping, but small pockets of the market are going to get a big boost as long as the markets aren't still tanking. Why is that? It's because, think about it like this. The markets are a team sport. It's a team race to get to the finish line, all right? So the big dogs can get there first, but ultimately, the small dogs also need to get there, no matter how slow they are, no matter if they're 300 pounds. My moderator in here, Abstract, he's at least 350, okay? He needs a bulldozer to get him across the line sometimes on some of these long races. So we need to go back. Some of the big dogs need to go back. The money needs to go back from the big dogs and scoop up the small dogs to help them finish. Does that make sense? Basically, when the market makes these massive surges, They have to go back and drag their little brother, drag that slow racer to the finish line. All right? That is why they do that. Because if you had just the leaders going and you had the laggers here, it would create such a unbalanced market because you would have such a polar divide between the non-leaders and the leaders that it would cease to have a decent market. Okay? So that is the goal with these. Hopefully that makes sense. 350 Okay, so that is the logic behind that. Now, one of the most beaten down industries was CrowdStrike, well, cybersecurity stocks. And I can prove that to you using Koyfin. So if we look right here, if we look at the most beaten down names between, let's do right here when we started to drop, let's do from the 31st down to today, which was we'll do the day before, August 2nd, okay? So we'll do from the 31st to the 2nd. So what I'm going to do is I'm going to go over a time frame and I'm going to adjust this. And the reason I'm adjusting specific time frames and when I want to analyze performance is because I want to see the relative performance because I want to see where they're rotating money. Since I'm a trader, I don't want to be comparing time frames from last year, from the year before. I want to be keeping my time frames active and current to the current market conditions so that I can know where that money is moving. So what I'm going to do is I'm going to go from the 8th, 02 here. So we're going to go like this, okay? So it's going to be right like that, right? So we're going to do that. Why isn't it letting me do this? Second, here we go. Okay, and what you'll notice here, between that date, right? Between that date, here were the leaders and laggers, all right? So you had defensives up here, of course. Defensives were the leaders of the trend, of course. Obviously, when the market is tanking, defensives are going to catch a nice big leg up. All right. But what do you notice? You notice that, okay, well, if we wanted to take a short during this period right here, XLU, XLP, XLRE, those would probably be the best short. Again, because if we expect a bounce in the market, we want to rotate out of defensives because they're rotating back into growth. So that makes sense to short those. Now, what you'll also notice is this IGV, this software. Okay, well, obviously I can't put cybersecurity on here. But what I want to show you right here is just quickly CrowdStrike right here. So CrowdStrike was one of the most beaten down names. So this name has been getting absolutely slaughtered from July 16th. All right, now that was news related. So again, if a market's selling off, and this is already so beaten down, and the markets do receive a rotation or they do receive a massive chop, then these names are going to get picked up the most aggressive because they've already had the most priced in. They are already sold off beyond belief, right? Now, I don't want to say oversold because there's always more selling in a market, but this right here is the idea that I went along this in the morning, which I absolutely did. And so this trade is absolute killer. I'm still in this one for the 9th. And I also have some 16th contracts. All right, so CrowdStrike, big day. And again, this was one of the most best performing stocks today. And you can see just if we do the performance of today. So if we just do, let's do August 2nd to August 2nd. So boom, boom. I don't know if we can do that actually. No, let's do the first. So the 1st to the 2nd. Why can I do that? Hold on. You guys are, witness me not being able to do this. Okay. Boom. Okay. Why can I not? Okay, here we go. Okay, so if you look at the top performers of today, you'll see, of course, utilities barely up, staples barely up. But ultimately, what got sold off the hardest, it was semiconductors, like we talked about. These are going to continue. Those were continuing to get sold off heavily because those were the leaders of the previous trend in some of these guys. All right. So does that make sense to everyone? Let's see here. Do I throw my GMOM savings into NVIDIA calls or Amazon? Oh, God. Please no. Please do not do that. Yo! Danny boy, thanks for the donation, man. Okay, Danny. Okay, Danny. Okay, Danny.
Huh?
We're pumping! All right. Thank you, thank you, thank you. All right, so that's pretty much that. Now, I have a question for you all, okay? So that's that right now. So what I did today, and I'm just going to briefly go over my, I'll ask you this question in a minute, but what I'm going to briefly go over is the trades that I took today and the trades that I'm going to plan to take tomorrow. Now, as far as the trades that I took today, number one, I did take a position into gold for the 9th. There was a few flow orders that came in as of this week that I believe are going to cause a nice little reaction for gold. So gold for the 16th calls I took, as well as the 9th, I believe this is going to get a decent pop. So it did buy the dip on gold. Let's see where that goes. Secondly, I did take a position in crowd, of course, and then also shorted XLP. So I know it says XLU here, but I ended up going with XLP. So these names I'm still currently in right now. Additionally, I did take a position in XOM, a little small one, but honestly, I'm thinking about bailing on that and just entering later this week. All right. So I have a question for you all right now. Okay. So we have a directional path that we could do moving forward with the stream right now. So there's 60 of you guys in here, and I'm going to give you guys all a chance to vote right now. Okay. Would you guys rather? What do you all want to do? Okay. Stay with Rader and do lesson plus trade find, or go listen in on a Zach call. Okay. So here's your two options. Wait, why can't I start this poll? Between 1 to 3 characters. Oh. Wait! I can't do a poll. What is this? Must contain 1 to 3 characters. Oh. Okay, we're good. All right, you guys have an absolute choice. There's a poll in here. Rader, get off soundboard. Okay, but I'm allowed to use my soundboard. Rader's freaking out. Oh, I didn't even read the message. I got to read it. Can you recommend me a friend like you, Spanish, because my English is not good? I really like concepts, but I need to understand more. Danny, I personally do not know any. Actually, that's not true. I do know some Latino traders. His name's Oscar. He's actually in the Discord. Social media creators, no, man. I can't recommend you any. But I do know people personally. Now, you guys can vote right now. Do you want to go listen in on a Zach call in the Discord? He is finding trades right now, which he is my mentor. He's working with a lot of the Discord folks. While I could be there tonight, I actually wanted to be with you guys tonight. So we could segregate this call into that, or you guys could stay with me. And overwhelming votes. Look at you guys. Stay with Rader and do lesson plus trade. So are we like affectionate? Are we look at these guys. How many people look at this. 29 votes. Everyone is just swamping stay with Rader. Twerk stream wasn't an option, so I settled for Rader stream. Okay, so
huh? Oh, hell no, man.
All right, guys. So what we're going to do next, and thank you all for all 63 of you guys who are chilling out with me tonight. What we are all going to do next is, number one, we are going to scan the option flow. One of the best edges of mine, if you will, a part of my market mechanic strategy, which is, again, having a perspective through technicals, seasonals, rotations, options, and options flow, as well as, just cyclical stuff. But other than that, having a perspective through the option flow is very important. So first, we're going to go through that. Second, we are going to go and we're going to try to find trades based off the rotations. We're going to look at the RRG charts. After that, we are then going to move into possibly a lesson after we develop some trade ideas. Okay? So thank you all for voting. I appreciate your guys' feedback, and that is all noted. All right? Okay, so first, why am I looking at the option flow? Well, the option flow has a mechanical response. I'll probably, hold on, let me get this. Okay, I guess that's not in there. But basically, what I was going to show you was an actual drawing of the criteria that I use. But we'll do that later. As far as what the option flow does, the option flow has a mechanical response to markets. And I've explained this many times on stream before, but certain option flow orders that meet certain criteria that I know create reactions in the equity markets. In 2024, the equity markets, which is shares, right? If I go to buy one share of Apple, that is the equities market. The equities market is moved by the options market, even though it is a derivative, even though it comes from equity, it actually influences so much of the equity price movements that you can actually predict stocks incredibly accurately through option flow. Why? Well, number one, you get an expiration date. That gives you a time frame of when market makers are likely to make a move off of this order. Why would they want to make a move off this order? Well, remember, guys, that market makers' job is to balance markets. You see this narrative painted all over social media that market makers are these evil firms that are coming to rip your drawers off and give you a wedgie and take their algorithms and shove it down your throat. No, they're not going to do that. And they don't care about your $20 stop loss. Abstract in here, he's my mod. He has $4 stop losses, okay? He's trading off lunch money. So they're not going to hunt him, okay? But if you go and you listen to other creators, I'm not going to name names, but you know those creators that yap all about how secret smart money is and how they hunt down. It's all fake. It's all a fake narrative. Market makers' job is to and I know this because I know some market makers. Okay, now you go, well, Rader, how do you know market makers? There's plenty of firms that you can literally go contact, especially in the Bay Area. There was a ton of them. There was Simplex. There were some other ones. There's some through Citigroup, one of the biggest. And you can go to these different people and talk to them. They're very algorithmic driven, but their job is to balance the markets. And when an imbalance comes in, they use equity to balance options. So therefore, the markets move based off the options market. That's all I'm trying to tell you. All right? Ricky, what's up, man? Somebody ban this guy. Okay, so that's that, all right? So when I go and I scan this, all I'm looking for is certain criteria that I want to see. I'm looking at, now a lot of you guys are, can I copy and paste this criteria? Sure, but you'll never know which orders are actually good because it does take discretion to know which of those orders that meet the criteria are actually tradable and actually have opportunity. Now, I've said this many times before. When I'm going to look at the option flow, I want to first have a narrative in my head. So maybe we actually do this first. And when we have a narrative in our head, we want to kind of know what we can expect for the markets moving forward. So if I wanted to build a narrative in my head, what do you think I would go? Let's ask you guys. If I wanted to build a narrative in my head, what might I look at, right? To say, let me build a story, right? I need to build a story that I can somewhat follow. Where do you guys think I should look? What do you guys think I should look at? Let's see. Let's stretch your brain in the comments. Let me know what you think down below. What do you think I should look at? Let's see what you guys got. So, Ricky, are we eating a piece of chocolate? Like, Abstract report. So there is no abstract. There's only the Rader report. Thank you. RRG, how long of trade? Okay, Ricky, I mean, that's not even that bad of a thing. Absolutely. RRG, yep. Check out the Taya stock plays for a narrative. Okay, so Ban Kuwani thinks of smart response. Okay, absolutely. That is such a smart response, Wada. Thank you. No, maybe it was a tough question, and that's on me. But essentially, what you guys want to look at is you want to first build a narrative. And narratives are found through where the markets are positioning right now. What is the expectation? You need to build an expectation for the market. Otherwise, if you're trading based off things that aren't expectations, which I'll show you in a minute when I chart the SPY for you guys tonight, you're gonna find that you suck at trading. Okay, a lot of mofos, they don't even have on their charts, right? They don't have on their charts that they don't have the expected range level. And it's so easy to get this. But the point I'm trying to make is that if you're not within expectations, the expected range lines right here that I draw on my charts every single week have well over a 70% accuracy of knowing where a stock will close in between by that Friday. Now, I don't know about you, but 70% is a pretty good damn odds to me. So I would want to draw this stuff on my chart, right? Yeah, right. So if we can leverage those chances elsewhere, that's how we build a narrative. Now, we need tools. We need a toolbox to do that. I have RGs, I have flow, I have the Koyfin chart, and obviously I've been yapping. I told you guys kind of already a narrative that I believe that we are in wave 4, or at least we are in the later stages of a wave 3. And so longing the most beaten down names is probably something I want to look at. So maybe I'm thinking about names such as semiconductors, the energy trade, as well as softwares, of course, retail, energy, these type of names. So I'm going to be looking at these names, the most beaten down names, to possibly long in wave 4. What also does good in wave 4? Well, if we expect some sort of consolidation, maybe we can catch a short later on in that consolidation to finish that wave 5 later in the month. So maybe I'm looking for a trade into the end of the month that potentially takes advantage of that liquidation. Maybe I'm looking at some sort of semiconductor trade or aggressive technology trade. So we'll get around to that. But right now, the narrative that I have built in my head is that if we are somewhat in a wave 4, we can expect a consolidation. We can expect a slowdown no matter what it is, whether it still be wave 3, late wave 3, who cares? I'm building an expectation. I don't care if I'm right or wrong. It's if I make money off this. All right. So the expectation is, of course, seasonally speaking, we are expected to chop and slightly rise into that August 16th expiration. Okay. So our narrative, again, is, okay, we're probably going to bounce into the August 16th expiration. We want to be in the laggers long, and maybe we catch a short after the 16th to capitalize off that final liquidation. Okay, that's all you need. That is a narrative. So what we're going to do next is we're going to go to the option flow. We're going to see which of these option flow orders do match somewhat of that narrative. I'll be looking for names that are beaten down. I'll be looking for energy names. I'll be looking for all sorts of these things. Okay? So right off the bat, I'm looking at things like PLTR here. This does not interest me. ASML, DD, 816. I'm not really... wait a second. Is this earnings? Might be an earnings trade. DuPont. Okay, this is interesting. So we'll have to keep tabs on this one. So let me copy and paste this one in here. And I'll explain why these are important in a second, okay? Okay, so ASML, not interested. DD, D-Dog. This is an interesting software trade, to say the least, but they have earnings. So again, we cannot consider flow that has earnings. So we're gonna go back. We're gonna throw on the chill lo-fi while we work here. And again, you guys are like, well, Rader, I signed up for the Daily Trader's Golden Moving Average Crossover Strategy, and why am I not profitable? It's because you guys don't put in work like this. Okay, all these mofos out there, Rader, how do I make money trading? You gotta sacrifice thousands of hours of your life. Sorry to yell at you guys. So what I'm looking at, this right here. So this is interesting. This right here is 89. Oh, these were placed. Okay, so I'm looking at historical. I'm a dum-dum. 1 second, guys. My bad. I was like totally wasting your guys' time. Imagine. Okay. So we'll be looking at this stuff. So SPY, GS. This is interesting. So check this out. So check this out right here. What do you guys notice about this order? First of all, let's see who the flow veterans are in chat. Why are you shouting children sleeping? Oh, I'm in trouble, sorry. What do you guys notice about this order? First of all, let's see who the flow veterans are in chat. Why are you shouting children sleeping? Oh, I'm in trouble, sorry. Children sleeping. 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 Oh, I'm in trouble, sorry. Child what do you guys notice about this right here? As soon as he placed this order, what happened, guys? As soon as he placed this order, what happened? As soon as he placed this order, what happened? Support. I bought it when he placed that order. Placed it at bottom price. Bottom wicked it up. All-time high. Placed his option puts. Discounted it. Okay. So when I tell you guys that there's mechanical responses to the market, did banks rally today? Yes. But I want you to know something. Okay? And this is going to be where you're like, holy shit. Okay? So there's this option flow on GS. It's for the 9th. This is pretty damn aggressive. 230K. But he's discounted. He's down on this. Right? As soon as he bought, which was at 444. So watch this right here. Okay? So he bought at 44449. Look at this. And I'm going to zoom in to make a point. Okay? This guy single-handedly built a support. And he caused this strength in GS. Okay? So when you see stuff like this and you don't understand the options market, I honestly feel bad for a lot of equity traders that don't understand options, because sometimes they will trade stocks blindly off the charts and not understand or not know that a flow order like this came in to guide them, right? Someone could have been shorting Goldman Sachs, but as soon as you see an order like this, you should lay off, right? This should be something that's like, well, hold on a second, right? So what I'm market manipulation, not quite, and I'll kind of explain that in a second. But so this is a flow order on GS. Now this is where things get really complex, and Rader's massive, throbbing, moist brain starts to produce trade ideas. Okay, is that when flow comes in like this is what's called a discount trade. So later this week we will get a shorting opportunity on banks again. All right, that is what this order is saying. Because as soon as he placed this order, the markets discounted him, which means that the markets essentially saw his order and they said, we need to rebalance against this. So the market maker bought the shares up, because remember, a put is the right to sell. So who's going to sell the shares? Who's going to have those shares? The market maker is. So he's going to have to buy the shares, okay, and have those shares. But after that, he doesn't care what happens, and that's when you likely see it drop. This is called a discount trade. And so this GS, you have to wonder, okay, well, is it this one that's going to be the best trade, right? This is a bearish trade on banks. We'll have to see. But when you go and you look at these banks, I can draw a connection in my head. I can go, okay, Goldman Sachs is a big bank. In Goldman Sachs right now, I need to compare the relative strength of this bank to other banks. So what I'm going to do is I'm going to go to JPM. I'm going to go to the other big banks. Okay, JPM. Is JPM stronger or weaker than Goldman Sachs? What do you guys think? Is JPM stronger or weaker? JPM. Kamala crash. Weaker. Okay, so you guys got that. So JPM is definitely weaker. Let's go to other banks. Bank of America is definitely stronger. Citigroup is definitely stronger. Now, I say stronger, but if you look at something like Citigroup, it's down 4%, but GS is only down 2.5%. Okay? You want to go and you want to short a weaker name. Now, since he placed this off the low, we want to see which one has the weaker response off the low. Right? So Goldman Sachs is potentially a trade, but honestly, I'm thinking that JPM, which is the weaker name, which is down... Oh, no, that's down less. Hold on. We could do BAC. BAC is down 2.47. Or we could do... I already shorted Citigroup. I think this one's extended. So what I'm doing is I'm going to try to find although the flow came in on Goldman, I want to see, is there a weaker and better setup to short, right? If it's too extended to the downside, I might not want to take that, right? So something like Citigroup here, even though it is significantly weaker, I don't want to take that because I already shorted that last week. By the way, that hit 1,000%. I posted this trade on Twitter. It was also on the Rader Report. This morning it was up 1,000%. But this right here is what I'm trying to do. Okay, so what we're going to do is we're going to go back to option flow and we're going to keep this one in mind. So I'm going to save this order and we're going to come back to it because if we see other orders as well, this could add to the thesis. All right. So Goldman Sachs, nothing too crazy there. Now this one's interesting. A hood. Wait, did they have earnings? How did he buy at 14 today? That's absolutely crazy. Hood went absolutely nuclear. But again, this is just another example of why you buy the most beaten down names, guys, is they just get the hugest rallies off the low. So that's the thesis behind the bottoming trade. Looks like this guy already printed, but you can see right here when he bought this trade, it was at, sorry, I can't see if you can even see my screen right now. He bought this at 8.9 at 14.26. So at 14.26, you can see this guy pretty much damn near nailed the bottom. So right here, 14.26. In this case, it would have been a follow instantly trade because it is smaller premium. It's not that much premium. It's only 100K. You follow instantly. It's a structural trade. Okay, but that trade's already worked out. So, okay, we're gonna keep going. IWM again. I'm breezing over these kind of these orders here. I don't care about them. IYR. Now this is interesting. I think, does AB&B have earnings? Yeah, they do. Okay. So do you guys see the light bulbs popping off in my head? When I see IYR, which is what, guys? What is IYR right now? What is IYR? Do some research. I want you guys to do some research. Lock in. If you guys want to be traders, you have no excuse why you're not participating right now. All right? Because, you know, I see all over the internet, I want to go follow the guy with the Lambo. I want to go follow the guy with that big, expensive course. Man, screw all that. Right? Where you become a trader is work. You work your ass off. You don't just sit there and you know, oh, look at his Lambo. Believe it or not, the biggest toxic pill in the social media community when it comes to trading is people would rather live their dream lifestyle through someone else than to try to work for it on their own. Think about that. Let me repeat that one more time. People would rather today live their dream life through someone else on social media than to actually work and make the sacrifices to make it a reality. So let me see what you guys got. Real estate. See? So when I see IYR and Airbnb, both related to real estate, I'm light bulbs are popping off in my head because I'm asking myself, are these contradicting trades? Are they along the same thesis? Are they both bullish? What kind of response do they create? What are they trying to go for? In this case, IYR, it is not an individual name. It is an ETF right here. So it does not have earnings, but Airbnb does. And so therefore it is my belief that this right here is nothing worthy because he bought deep in the money puts here, which in nature is a bullish trade, but since he's outside of, since he's trying to play earnings, it is not worth it to me. Okay. I don't like trading earnings flow. All right. See, there you go. Kuwani says, damn, bro, I got to work hard. Bro. Cuts about to start in September. That bullish is for real estate. The believe it or not, the trade is into real estate. We've been bullish real estate for a while, but remember, guys, a lot of the rate sensitive names, you don't actually see a majority run up in after the rate cuts. You actually see it into the rate cuts. You don't see a massive rally after. So a lot of people who want to trade this rate cut idea, they're going to get absolutely smoked because they waited until after. But there is still upside after. I don't want you to think it's all over. Moderna, interesting. Out of the money. That BA, I believe, has earnings as well. No, they don't. Okay, this is interesting. We'll take a look at that one. So let's go take a look at this Boeing here in a second. So Boeing. Okay. So what do you guys notice here? Let me see what you guys see. What do you guys notice here? What is this? What do you guys notice here? And this is about finding ideas. What do you guys see right here? Rader did a hit and run on a small family of 4 with a single mother. He robbed them and took their money to short the banks and absolutely printed in order to feed all 5 of his baby mamas. W. Rader. You know, I have the most professional yet most degenerate chat out of any streamer. I swear. All you guys are like working professionals that just partake in my degeneracy. My 20-year-old humor. Bearish, strangle, yes. See, look at you guys. You guys are locking in. Now remember, Mr. Reed, straddles are the same strike. Because he got different strikes, this is considered a strangle. Now, what does this mean? So between you and I, what are some possible conclusions we could make from this order? And I want to test your guys' brain. I want to take that brain and I'm going to whoa, wait a minute. I want to just stretch you. Whoa, I want to make you more intelligent. There we go. Okay. So what is the conclusion we could draw from this? Okay. Let's play he's playing vol, okay. He's playing high vol. It will close between the 2 strikes. We're going to see an expansion in either direction. Freak Rader. Okay. So what this order is betting on, at the bare minimum conclusion we could have is, since he did buy these puts, we can check if he sold these real quick. He did not sell these. Okay, these are not sold. So, the conclusion we can draw from this is that at the bare minimum, this is going to expand. Okay, at the bare minimum, this is going to expand. That we can expect some sort of expansion. Why? Because if he's strangling, he's betting on a significant move in either direction. Okay, now it is our job to assess, number 1, is it actually worth taking this trade or taking a similar trade? And number 2, is this the right ticker to play the idea he's trying to play? Let me explain. What if he was playing BA, but there was another defensive that was actually better that we could play? That's my thinking, guys. That's how I make money. That's how I beat markets. And that's why I am the best. Okay, that's a little cocky. I'm not, but that's the idea. Okay, so what we're going to do is we're going to go to this right here. And we're going to go to BA. And we're going to assess what he's trying to play here. Okay, so check this out. Check this out. So do you guys see right here? He placed this order. He placed this order on BA at 165 and 164. So right around the top here. So he placed it right around the top here, which means he is betting on a significant expansion up or down in Boeing. And why is this such an intelligent order to potentially follow? Not follow because he's an insider. Not follow because he knows more than us. Not follow because he's got illegal information. We follow because, mechanically speaking, can we make money from this order or a different ticker? Because it's going to cause a reaction. Okay. So he placed this right at the pivot. Okay. Now, this is technically below the 3rd deviation of this channel here, but he placed it right at the pivot, right at the low. So what he's saying is it's either higher or lower from here. Now, you can look at a chart of Boeing and go, holy shit, this thing looks ugly. And I absolutely agree. However, That might be why it's beautiful. So right here, the idea is to play an expansion. All right. So how would we do that? Well, number one, we could assess if we think he's going to be right. So let me see this. So he's betting on an expansion by the 16th. And he needs 162.5 to the downside, which is this. But he wants 172.5 here. Okay, now what do you guys notice about the strikes? What do you guys notice about the strikes? What do you guys notice? Because the strikes are kind of intelligent. What do you guys notice about the strikes? Let me back it out here. What do you guys notice about the strikes? Here's 162.5. And here is 172.5. What do you guys notice? Let's see what you guys notice. Let's see how big brain you guys are. Stop shouting, my children are sleeping. Okay, abstract. This is like having high-level PhD thesis conversations of chaos theory at the strip club. I love it. We love to see it. Hope you're doing well, man. Glad you're here. Would we like the options change for this or nah? Bottom of the tops of the range. We could. Demand it. They're probably at major liquidity zones. Can't see both out of the money. So this guy, and this is on purpose. This guy set his put strike at the low right here. Why do you think he would do that? It's because he probably doesn't think that it's actually going to break the low. But he's like, if it does, this is my order to protect myself. So I believe this is actually a more bullish trade than bearish. Even though he put less size on the calls, it's still not by much. So I believe this is a bullish trade just because of how he placed the strikes. And so therefore you want to play a continuation of Boeing. Now, another thing we can do is we can go to the options chains and we can go look at Boeing to see if they have any major imbalances, because that could tell a story. It's a strangle. Yeah. Inverse strangles are okay, so check this out. So we have a massive put wall at 160. And what do you guys think? What does this chart look like right here? What imbalance is on this chart right now? What do you guys see? What do you guys see? What do you guys see? Drop it in chat right now. Drop it in chat right now. Okay? So if this is where we are currently in price, all right? Now let me take a screenshot so maybe you guys understand this a little bit better. Okay? Maybe you guys just need a refresher on how this all works. If this right here is current price, and this is up, and this is down. Okay? What do you guys notice right now? Max paying 175, but then 180. So maybe this is a tough question, and maybe I'm screwing you guys over. But do you guys see that none of the calls are in the money? Remember, if price was above it, it would then be considered in the money. But there's not a single call wall that is in the money right now. And if we were to be very intelligent traders, you would want to ask, if a market maker's job is to balance, what is the best move here? What do you guys think? Buy. Yes. So Boeing is a buy. Now where to? I believe at least to 180. Why 180? Because when you have this massive sloping kind of staircase right here, given that you've already hit 160, I believe, almost nearly, that is the area you want to be bullish off of, is actually now. You actually want to try to day trade this. Now, swing trading is not really advised, but you can see in the after hours, Boeing is getting active. Boeing is ready to fucking rip. But I believe that 180 by 816 is very possible. Okay. So do not count Boeing out. All right. I believe Boeing is a bullish trade. And we've concluded this both from the option flow. Do you guys see how, and I really do mean this, you guys need to take note of this, that when I'm building a trade, and a lot of you guys, and a lot of people ask me, Rader, how do you have the confidence to go out and every week before the market opens, lay out these trades with such specific entries, such specific ideas? How are you the only mofo on the social media to know this? Why do you do this? It's because I am so confident in the way that I trade. I'm so confident in how I come to ideas, and I was taught extremely well how to come to these conclusions, that I am the only mofo, and I challenge you. Name one other mofo, one, that doesn't fake P&Ls, that doesn't shit shame everyone else, that doesn't have drama. You'll never see a hater. You'll never see a Rader Trader hater, okay? There have been some on these live streams, but we banned them. No, but my point is, you won't see that because these people wouldn't last 30 minutes in a call with me. Okay, they'd start tripping up. They'd start talking about how they have a Lambo. They'd somehow get off course and how they have 8 baby mamas. And, I'm just not about arguing about that. So the idea is here that when you're going to draw these conclusions, we went from the option flow. We found an order, right? And that order pointed us over here. And we pulled up the charts. And that chart, that price chart, made us curious to go then look at the options chain. And that options chain then painted a picture that, maybe what we do have room to 180, that we do have an imbalance before 816, and that we can try to time some sort of bounce. It's bouncing around these different avenues that gets you to that final conclusion. I always tell people, do not find a trade on the price charts first. If you're looking at candles first before you look at anything else, you're going to fail. At any point in the markets, there are thousands of head and shoulders, there are thousands of cup and handles, and I say this every stream. How do you know which one's going to work out? If at any given moment in a market, there's thousands, hundreds of thousands potentially of head and shoulders and cup and handles on different time frames, how do you know which one is going to work out? Well, you don't. So what you need is an edge, right? You need an edge that validates why that price action would work out. And something like this flow, something like the context of Boeing being a defensive, something like it being really beaten down over the course of the last few months, it could receive a massive rally into the August 16th, especially since there's an imbalance. Does that make sense to everyone? Kuwani says, I wouldn't last 30 either. Okay. So this is outrageous. All right. So Boeing is a bullish trade. Can some of you guys screenshot this and help remind me? I'll tweet this stuff out tonight. Okay. I'll tweet this out on my Twitter tonight. All this stuff. Thanks for the lesson, man. Good night. Good night, Tim. Hope you're doing well, man. Stay safe. Okay, so I'm going to screenshot this flow here. All right, so there's that. Now, we're going to keep moving on here. We're going to keep chugging through. We're going to try to finish this up real quick now. Now, you're like, Rader, how are you scanning so fast? Because I know what tickers and I know what to look for. Now, see, my head stopped right at the C because it's a bank name, but this order is dog shit, so I'm not going to consider it. Same with this one. This is dog shit too. I'm not gonna consider that. This FedEx is really interesting. I don't think they have earnings. Okay. So what do you guys see here? So let's go back to FedEx. Also, is it just me or does UPS absolutely clear FedEx? Every time I order from FedEx, my package ends up in shambles in the front yard. Like they just like they must throw it, like they must do a drive-by and like throw it at my apartment or something. I don't know. But this right here, this is a 280 put. Now check this out. 136K. It's not the biggest order ever, but it's an interesting ticker. It's very aggressive expiration, and he got it around 11:02. Now, if I'm looking for orders, and again, I'm looking for orders that are aggressive and that could mean something in the markets. This is a discount trade. This is not a hedge trade, so I'm not looking for the market makers to necessarily clap him instantly. But what I'm looking at here is 11:02 a.m. is right around Euro close. So it's interesting that he bought there. That's a very interesting time to buy. So he buys this at 282. So he buys right here. And what do you guys notice? He buys at 282.29. Right here. Okay. He literally created the support for this stock. Okay. So when we're looking at this, we have to evaluate, is there still some juice to be squeezed out of FedEx? Let's go see. Or is there a better trade other than FedEx to take? So top to bottom, only 7%. That's pretty damn good. It's okay. So I like this. I like FedEx. I think that one could be a decent short. So we'll look at this here. Does UPS look better? Probably not. I think FedEx has more juice on the bone. So do you guys see this? Does this make sense? So this right here is going to be a pretty decent trade. What I'm going to be looking for is, since he did buy the 280 strike, I am going to bet that this guy gets discounted, and then we will potentially get an entry either Wednesday or Thursday of this week. Okay. So this is going to be a short trade. I'm not going to get the 280 strike, and I may end up getting the 816 strike. But ultimately, at the end of the day, I believe this one still does have some more downside. So this week, be watching for this one to Thursday or Friday. Likely is the most likely days that this sees some sort of bigger drop. Okay. What, a put or a call? Yes, he is certainly down on this position. So let's see here. Okay, so that's FedEx. So I'm gonna keep scrolling here. BAC. So look at this. So do you guys see how this matches our thesis here? So 1,500 contracts here. This is a hedge order. So, and I told you guys, when you go look for orders, you have to go look for orders that match up. And if you'll remember, this GAC right here, this GAC and then this BAC, they're both banks. And this one is a bearish discount trade, and then this one is a hedge. So, actually, let me see. Did he get rewarded instantly? Let me see. So he bought at 36.63. Okay, look. So this guy bought a hedge. So any pump this week on banks, if we see any sort of significant rally, that is definitely a reason to bet against one of them, BAC or GS, one of these names. And it's funny how we actually picked out BAC or JPM, but honestly, I think JPM's the better one, but we'll see. This one right here, BAC. Again, he got that 36 strike. He got the 36, right? Yeah. So he bought a little bit in the money. I believe this is enough to try to time a short. Okay. So BAC and GS, do you guys see how those ideas merged together on the flow? You saw two different orders that had kind of matching parallel ideas. That's what you're trying to do. Okay? It's not, again, it's not about finding insiders or politicians. This idea that all these clowns are making all this money and they have illegal information and you need to see them on the option flow. It's a complete joke. Okay? That's not what we do this for. We're trying to find mechanical responses in the market of markets needing to balance orders out. And if we see proof of an order being balanced out, that means it's meaningful and that means it's likely to work out, right? Or if it's a hedge order, for example, we want to see an inverse reaction. We want to see our trade is actually betting against that order. But most of these tonight have been hedges. Sorry it's so dark. I need to turn this light back on. This Uber is interesting, but I think they have earnings. SLV is kind of interesting. APO is really interesting. But I don't know if I want to deal with that. XLE. See, there we go. $86.5 strike. Let's go look at this. Not really the best. I'll pass up on that one. Gotta take a look at this Uber. God damn. Earnings trade means we don't look at it. This is interesting. Does Lyft report? They do. Never mind then. And you guys might wonder, why am I not looking at flow for earnings? It's because since there is a catalyst, that catalyst overpowers any sort of response that market makers would need to do. Because again, market makers are already bouncing into earnings and through earnings. So it doesn't make much sense to sit here and try to come up with ideas when it's data dependent on whatever happens. Okay, so check this out as well. So I told you guys to look for these different themes across the option flow. And we just saw a BLK order. So look at this. Hold on. Now this order is crazy too. Does Dell have earnings? No, they don't. Nah, that's actually too good. Okay. There's too many flow. I need to concentrate. Holy crap, there was a lot of orders. So do you guys see all this flow on the banks? I'm telling you, this is going to be a decent opportunity. Okay, so we have, what was that ticker we needed to go look at? We need to look at Dell. And then we also need to look at BLK. Okay, so Dell. Check this out. Very aggressive order here. 160K. Placed at lunchtime. Let's go look at where he placed this. So right here. Let's take a look. Let's take a look. So 97 strike. 8-9. So this is a discount trade, and he is not discounted yet. So this is a continuation to the upside. Yep, look at that. So this is a continuation to the upside on Dell, and then try to short later this week. Again, Wednesday, Thursday, or Friday. Don't do it tomorrow. It's going to be Thursday or Friday. So this right here is also a short trade. Okay, now additionally, we saw this BLK order. And guess what, guys? BLK, BlackRock, it's another bank. Woo! Who could have guessed? So that means we need to pay attention to it, right? Remember, connecting themes, doing all that. Now, this is for 823. And when I look for orders that are aggressive, that could cause reactions in the market, I look for expirations that aren't monthlies. Now, I know I've already shown a lot of monthlies, but look at this. 823. If it was let me explain this. The purpose of option flow is to find orders that stick out from the crowd. 99% of option flow is useless. Only certain orders have the potential to work out or create some sort of reaction from the markets. This order right now, because he did not get 816 expiration, he's therefore purposely going away from the crowd. He's going to the next expiration, the less crowded expiration, to play this trade. That's pretty damn smart. So what you see right here is he placed this at 845. Okay, so he literally bought the top here. It's starting to dump. The idea here is that you would see a pump tomorrow, and then you would see him get discounted. And then by the 23rd, you see some sort of reaction down to take entry. So this is likely to be an entry into the 16th or on the 16th rather than playing this week. But this idea needs to be kept on watch. And again, this BLK matches the thesis that we are trying to short banks on a rally up later this week. Okay, GS, JPM, something like that. All right, does that make sense? And again, you guys can take all these trades down, write them down, and by the end of the week, when I go live on Saturday or next week, whatever, whenever these play out, if these don't play out, you guys can come and slander me all you want. I don't care. But the reason I'm doing all this is because I am confident behind the skill set I was given, and that I'm not going to sit behind some freaking paywall and say, yeah, come join my group and then you can see my trades. Like, I'm going to be public about how I trade and what I trade, because I think the industry standard that has been set, the bar, is like down here. I'd have to do, if I showed up to a party with other trading influencers and they asked me how high the bar was set, I'd think it's like limbo. Like, I'd be on my back, like doing a bear crawl, trying to get under this bar, because it is so damn low in the trading community. You got mofos flexing Lambos, flexing, and yet here we are as intelligent individuals shitting on these people. But what I want to actually emphasize is that these people have the largest influence and that they have the biggest audiences in the trading space. And so while you and I can feel superior, we are not, because we are equally a part of the problem, because we are not doing anything about it. Okay? So just understand that. I bought Rader Twerk coin and got rug pulled. Okay. So there's that. All right. And that seems like all the flow, guys. Actually, I did see an XLF. Did I see an XLF? I definitely saw an XLF. Yeah, of course I did. So this right here, this is an interesting order as well. This is definitely supportive of the upside trade in the banks, but to eventually short later this week. All right. So do you guys see how all this flow in the bank, all these flow in the banks are kind of the same. They make sense. They are kind of right there. So this would mean that over 41, which we are at, somewhere around 41.60 to 41.90, could potentially offer a decent short for this week. Okay. So we're going to screenshot all that. All right, lads and lasses. With that being said, let's go check out the RGs real quick. If you are unfamiliar with this tool, this is just a quick little scanning tool. Now, it is worthy noting that on the 60-minute, we are seeing what, guys? What do you guys see? If I were to quiz you right now, what do you guys see on this chart? Okay, I'm going to make it nice and big. Okay, what do you guys see in this chart? Type in chat right now. What do you see? You drive a Buick Enclave? Let's go, baby. Hey, as long as you own a vehicle, as long as that sucker's reliable, I had a RAV4 and I still have a RAV4. 2008 RAV4. That's my daily, man. Awesome car. RGs looked rough this morning. Yeah. 132 Wolf. Whenever you see a massive move in the markets or a big gap down, the RGs are irrelevant because you need a huge period of rebalancing in the morning. What do you guys see here? XLY, XOK. Okay, what kind of rotations? What do you guys notice? What kind of stocks are these over here? Growth or defensive? What kind of sectors are these? XOK moving to improving. Right. So this looks like a defensive growth rotation. So right here we have, just to be clear, this is on the 60-minute time frame. So it typically takes about 3 to 4 days to play out most of the time. Like you can see the last time we were over here was on the 31st. So it is about 3 to 4 days that this plays out. Okay. And you can see we're over here. So to complete a half rotation or, half rotation from here to here takes about 3 to 4 days. So right here, boom, we're right over here. All right. So with that being said, if you look at these sectors, you can notice that we have technology, discretionaries, financials, energy. These are all growth names over here. Okay. Now I actually believe there's a shorting opportunity in banks that we talked about, but you also see that there's a rotation out of defenses. That's very clear. I shorted XLP. Also, you could also have shorted XLU. All right. So that was a trade on the Rader Report as well. So that's the 60-minute. What about the 30-minute though? Okay, it paints a somewhat similar picture. So potentially we could gap down tomorrow and this could all change. This is something we're going to be looking for. But as of now, as it stands, all the data points that we are in wave 4, that we can't expect some sort of consolidation, that we can't expect some bullish bias, that the trading the laggers like Crowd to the upside, Boeing to the upside, these type of names are going to be the better trades. Okay, and even banks, hell, if banks start to roll up and they start to gap up, I wouldn't mind playing a few day trades in those. But I think the longer term swing trade is going to be down, especially with that BlackRock flow. Potentially that 8-9 flow actually doesn't work out given that how beaten down these names are. So maybe playing the rally is actually the better trade and then waiting on that discount and playing the weakness later next week. Okay, so that's that. So hopefully you guys learned. Now, I'm going to finish up this stream with a 15 to 20 minute lesson. This stream is titled How to Trade Market Crashes. So I'm going to give you guys the option. Okay. I'm going to give you guys the option. I'm going to put another poll in chat. I'm going to put another poll. Every night, every stream that I do, not every night, but every stream that I do a lesson. And tonight is over the market crashes. Okay. So you guys can pick what you want to do. Well, screw it. I'm not even going to ask you guys. We are going to talk about a few different ways that you can spot a bottom. Okay? A few different ways. So, and this is for all my new viewers in here. Some of you OGs, you know this already. Okay, let me zoom out. So tonight, we are going to talk about this. Now, before we start a lesson, I do want your guys' feedback. How would you rate this stream overall? Do you guys like me yapping more, talking about the, less downtime, doing more things? What do you guys think? Let me know in the comments how you guys like this stream. Of course, we are not done yet. We still have a lesson to do. But I want to let you guys know that this is the most amount of viewers I've had on a live stream. We almost have 60 right now. That is a record amount for Mr. Rader Trader, which is pretty damn good. But yeah, I mean, a lot of my listeners are sucked into a call with Zach in the Discord. But what are they talking about? Let's go see what they're talking about.
And then there's also the ad right here.
Okay, so right now it looks like he's looking
now, in the case
at
of what's
Tesla.
happening here. Who knows? Maybe it could open right,
Yep.
but if it doesn't, what do you do? Well,
So there
the
you go.
other trade is you
This
wait
is
for it to
a
get all the way to here.
this is also a way forward. So you can see
and reject
I'm not even on call with
it.
Zach, and we're already talking about the same
You wanna
ideas.
see
That's
a chop
crazy.
orbit fake down.
Okay.
and then
That's enough of that. But how would you guys rate this? Let's see. -1 out of 10. I love the search. Awesome. Yeah, X dollar. I thought it would be unique as someone who does this for a living. Of course, majority of my time is also searching. You would not believe how much time it takes to write some of these reports because I put 10. Sometimes I've put 10 hours into a report. 10, 12 hours of researching. So it is majority of a job as a trader is laying out that plan in the after hours. You guys would laugh how much time I spend during the day actually trading. I walk around and I occasionally check my phone because I have occasional alerts set. I'm not sitting at a screen all day. While some people do it, I don't think it's productive at all. I wake up, I manage my positions in the morning, put my phone down around, 10 or 11, depending on what's going on. And then the rest of the day is just occasional check-ins. But majority of my work is in the after hours. I've been spreading the word about your channel. Let's go, Wolf. W supporter. Could be a 10 if he twerked. Okay, so. All right. Will the market pump at 11:30 tomorrow? So we actually kind of already got a rally, but what I was going to talk about tonight with the market bottoms, typically in bear markets bottom. I don't want to mix this up, but I believe it's Tuesdays at 11:30s, and on bull markets typically bottom on Mondays at 11:30. Okay, or around lunchtime. That's the general time. Okay, so tomorrow, look into power hour. 11:30 is where you're going to make a pivot move, or into that euro close. You're going to look for a pivot. Okay, that's to the upside. 5 out of 5 stars. Awesome. Cool. So for my members out there that are new, how we spot a market crash. Again, this stream was titled how to spot a bottom, how to trade / how to trade market crash. Number one, at least let's just do how to trade a market crash. That sounds like a better thing. How to trade a market crash. So number one, the first step you're going to do is know where opportunity isn't. Okay, this sounds so silly and it sounds so simple, but one of the most simple ideologies you can have is know where opportunity isn't. For example, I did not short this morning. Do you know why? Because the markets were down 3-4% almost at market open. Apple was down 10%. Shorting after a 10% move doesn't sound all like that great of a risk to reward situation. However, in the morning, I did manage my positions. I was swinging C. I was swinging URI, which I'm still in. I was swinging some other trades. And I was looking to get into some other ones. XLP. I was looking, of course, I entered crowd. But one of the best things that I memorized how to do was know where opportunity isn't. When you see the indices open down that much, the opportunity isn't in them. They're not in the indices. It's elsewhere. And so if you know where opportunity isn't, it's a whole lot more comforting to go find where opportunity is. And that is in the laggers that were the most beaten down, the things like that. There's two things that you can waste in a market: money and time. If you guys are wasting money, all right. But there's one thing that is very, very punishing, and that is wasting your time, because you can waste money and not waste your time, but you can waste time and not waste your money. Okay, so it's a double-edged sword for time. You cannot waste time. And if you're sitting there staring at stocks that aren't going to move, or that don't have opportunity, or that don't have some sort of significant meaning to the market right now, then you are not going to make a lot of money. You're going to waste time. You are going to dwindle down your opportunity. You guys have to understand, we have limited time in this market, right? We're not going to be trading, I'll be trading the rest of my life, but we're not going to be, from a non-pessimistic standpoint, we're not here forever. And with that attitude, you need to make each moment count. So that is as simple as that. Know where opportunity is, and that's very simple. Now, the next thing that you're going to focus on how to focus on market crash. When markets gap down like this, understand that markets take time to rebalance and form a bottom. Okay, markets do not V-shape reversal very often. In a market crash, you will never see a V-shape reversal. You will never see, I know you guys think that COVID was this. It's a very rare example, but even COVID had a lot of pain. Okay, if I actually zoomed into, I don't want to go there. But even COVID had its pain. It had its fake outs. And what you guys need to understand is that it takes time to rebalance. So, for example, someone in here, 132 Wolf or whatever, he said that the RG charts, the rotations in the morning were awful. Yes, absolutely. The rotations were awful. So what we need to do is be patient. Okay, we need to understand that markets take time to rebalance and form a bottom. It's not going to happen in 2 seconds. So that leads me into my next point. What is a market bottom? How do we spot it? Majority of the time, there's 2 bottoms. Okay, in every single market bottom, there's a technical bottom, and then there's the liquidation bottom. The technical bottom is where everyone buys. Okay, that is the first initial rally. That is where everyone, typically there's a consolidation or a consolidation up here, whatever. That is where everyone rallies or buys. But then that actual bottom on the chart that you see is actually a liquidation. Okay, and that is where you climax in selling. So every bottom looks like this right here. All right, you have to have a liquidation. If you don't believe me, you can literally go to any major market bottom. Okay, right here. Look at this. It's not always pretty. Here's the technical bottom. Here was the liquidation. Okay, now how do I know this is the liquidation? Because we never made a new low after this. Okay, so that was the liquidation. Okay, so let's go look at another one. That's not really a market. That's not really a bottom. Right here. Here's your technical bottom. Here's your liquidation. Okay, now I'm on the hourly time frame on XLF, so it's not going to be as pretty as it was on SPY. But that's how it is, okay? So every single market bottom has 2 bottoms, a technical and liquidation bottom. So new bottom tomorrow, not necessarily. 10 out of 10 learning other insights on options to understand markets. Let's go, baby. Bro, I hopped on the charts in the morning just to see NQ down 1,000 points for real. XOU was the best today. Yeah, that was a decent short. I like that. That was a fun one. Time is the most precious resource source. I'm twice as old as you. Haas, I appreciate that, man. Yeah, you're absolutely right. My parents tell me that every day. So new bottom coming. Potentially. So yes, we still believe that this is not the bottom of the markets. We do believe that there is still another low in store for this. Whether that's the liquidation or not, who cares, right? Who cares about that? So what we're going to do here is we're going to look at, we're going to go to the next point here. So after you identify a bottom, something like this, you have to find your leaders and laggers, okay? So next what you want to do is you actually want to go find your leaders and laggers. Now, why is that important? It's important because to play this bottom, you need to go find your leaders and laggers. You need to go find the names that are going to have the most explosive move off of this low, which are going to be the laggers. And then you play the most prolonged move. Remember, the laggers get the most aggressive bounce, the quickest and most aggressive bounce, but the previous trend leaders get the most prolonged bounce. They get the longest one, but it's not the most aggressive. The most aggressive, the quickest, are the most beaten down, and then the most prolonged one, the ones that last for months or whatever, weeks into that bigger move off the liquidation, that is what you want to play the leaders, okay? So once you see the rotation into the laggers, you get a big spike, big green candle, and then you get those start to taper off. They start to sell off a bit. Then you'll see the leaders start to chug up. That's when you play the names. So you want to find the leaders and laggers. You always want to know that when you get to these market bottoming conditions, you want to know what the leaders and laggers are. Now, the time frame in which you look at the leaders and laggers is very important. But you need to understand that, like right now, for example, the laggers are solars, the laggers are energy, technology, these kind of things. Okay. All right. So what is one more tip I can give about trading crashes? Oh, yes. And I'll show you this in a second. Okay. So you guys have to know when to strike. Okay. Oftentimes, market bottoms is when you'll hear the most negative news. Now, Does that mean today is the most negative news? I don't know. But what I will say is this. Again, that doesn't relate to our trading thesis right now. As far as this right here, remember last 2022, there was this doomsday scenario about Fed and inflation, and it caused a massive. Now I don't want you to look at the news, but I want you to understand that when things look the ugliest, the most volatile movements, this is often the bottom. When you get that liquidation, it's often the bottom. It is when people swear that the markets are starting to break down, and you need to know when to strike. When you need to know when to strike, you have to be very patient, because remember, you're fighting a $70 trillion market. You cannot just go in and buy calls with a falling knife, whatever. So look to seasonal expectations. Seasonal expectations. This is one of the best, and I can't say this enough, best guides to creating profitable expectations. If you guys over the last several years were to just simply pull up a chart of the Rader login leaked, if you were to simply pull up a seasonal chart like this would have helped you so much, right? In 2022, we bottomed in March, right? Let me go show you. So someone take a screenshot of that, but let me go show you. Okay, so let's go look at this 2022 bottom. So we had a bottom in March and we had a bottom in October. Let me show you. So this was the bottom in March. Where is it? Right here. So here was I'll remember this because I remember all the big trades I've taken. One of my first big trades that I really made a lot of money on was I played Apple on March 14th. I longed Apple. It was a leap trade on March 14th, and I made around 700% on my leaps. Now that might not seem like much, but Apple was a significant outperformer following the 14th. So I literally bought the bottom on March 14th. Now, if you would have used this, any seasonal tool, this is typically when you buy. This was right before the liquidation. Okay, so we buy before the liquidation. I bought a hedged position. It was about 2/5 of my position was 1/3 of my position, whatever it was puts, and the rest was calls. Okay, so I made around 780% on my calls, and of course dumped the puts for close to zero. But that's how that worked. Okay, so that was one of my big trades. Okay, so what else can we do to try to time a bottom? Well, again, seasonal expectations are huge. Combining that technical and seasonal aspect, you have right here, you had a bottom. The next period where seasonals typically bottom is in October. So right around October, you typically see some sort of major market bottom. And this happens every year. I mean, 22nd. Let's go to the October of 2022, right here. Oh, I'm on Apple. Get a SPY. Okay. So I'll tell you another big trade that I made. This is during October 2022. Again, what do you guys see here? What do you guys see here? You see a technical bottom. This is what I was telling you about. Technical bottom, and then you have a liquidation bottom. This is where everyone buys. This is where the liquidation happens. After that, it's smooth sailing. Now, in October of 2022, I remember one of my biggest trades was OIH. This one went absolutely nuclear. Where is it? Right here. Okay. So this one went absolutely badonkadonks. Right? So this is SPY. That's that. So what I'm saying to you now is if we can use seasonal kind of tendencies to guide our thinking in a broader market bottom, we would maybe think about later in August. August 24th seems to be, sorry, this is like so tiny. Let me blow this up. So right here, you guys can notice right around this, August 24th is typically when you see some sort of bottom. Okay. So if we're trying to time a bottom, we need to build an expectation that the week after that 16th expiration, we can expect a wave 5. And in that wave 5 liquidation, we set some sort of bottom. Once we make that wave 5. If we are in wave 4 into the 16th, then that wave 5 is going to be after the 16th. Having that expectation is such a good thing in a crash, because otherwise people are going to be tugging their chickens to the idea that the markets are crashing and that everything is going to zero. Remember, people on the internet, like the Maverick of Wall Street on YouTube, they do not have positions in the market, but all they do is talk about how the markets are going to crash. And it's a horrible way to invest because none of these guys have made money because they're too scared to invest in anything because they're too busy tugging their chickens to a bearish narrative. And what you guys need to understand is that in a market crash, you need to set an expectation. And if you guys have followed me for a while, you'll know that I have a neutral perspective. Literally in every single one of my reports, I give upside trades and I give a downside trade. In every single report, I give a bearish thesis and I also give a bullish thesis. Now, this isn't, I do have a lean one way or the other in which I prefer to trade, and I talk about it on these. We talk about it in the group and everything like that. We have a bias. We say, hey, this is the bottom. Like I'm saying, we're getting close to the bottom, but the downside trade is still, right now we want to play the upside trade in that wave 4, but the downside trade is still the dominant one. We want to play that wave 5 after the August 16th expiration. So with that time frame, with that idea, I need to go find a trade. But there's always going to be upside trades. Whether they're worth taking or not, there's always going to be upside trades. So in a market bottom, you guys absolutely need, or in a market crash like this, remain neutral. Stop tugging your chickens to this idea that the markets are going to keep going down. Everything's going to zero. That's just not the case. Okay? Even in a tanking market, the markets are balanced. There's always a trade to take. All right? Is it harder to find opportunities than others? Absolutely. But there's absolutely no excuse to why you guys are in these market crashes participating in this narrative that everything's going to zero. Because I promise you this, these clowns who are drawing charts saying SPY to 300, SPY to 400, they're not going to make a single dime in the market. Why? Because they're going to get clapped shorting. They're going to buy puts for next year right now, and they're going to get absolutely clapped. Because they don't understand theta decay. They don't understand implied volatility. They don't understand that why would you buy, why wouldn't you just wait to buy your leaps in late August, right? So there's going to be a lot of stuff that comes out over these next few weeks. Just understand that the mechanics of the market ultimately dominate it. Do you think the markets care about whether Israel is fighting right now? No. Do you think the markets care about whether Ukraine and Russia are doing something? No. Do you think the markets care about, the political tension between the Palestine and all that? No, they don't care about that. What they care about, what news comes out, whatever, there's a mechanical response that is almost always predictable. Isn't it funny that the negative news that dropped this market came out on August 4th, which is typically the day before you mark the bottom of the seasonal trend? Look at this. Isn't it funny? Now, am I saying the market's rigged? No, but negative news always comes out around August. That's just how it is. It's like a cyclical bad news cycle. All right? So let me catch up on some questions. Sorry. Rader, from the bottom of my pocket, thank you for teaching. You're welcome. Appreciate you showing up, X. That's all I asked for, man. Final capitulation. VIX is nearly below today's low, all-time high. In after hours. That's crazy. Where do you get your seasonal charts from? A lot of them online seem different. Cash flow. So I previously pay for Season AX. I used to have Season AX. It's about $120 or $200 a month. But what I actually did is just I went and made my own. So this is on the Rader Report, big guy. But it's for all pro members. This is the seasonal tool. So I built this. Is it typical a combination of a few items? But other free options, I should follow up on this. Other free options, Cash? Well, I guess not free, but we do have a seasonal indicator. So, for example, this right here. One second. My charts are a mess. I apologize. So this right here, we made this indicator for our Discord members. It puts it on your chart for you. So this is the seasonals for SPY. So you can see that typically bottom in March, and you get the rally, and typically the June or July rally here. So these are the seasonals, and it does any stock. So you can go to like J&J, and it auto calculates for you the tops and bottoms or whatever the biggest pivots. So that's also another tool that we've created. But is it a typical combination of a few items that came together to make a truly explosive trade from looking at seasonal timing and balances from... So hard cut, you're absolutely right, man. There's a few combinations, but this idea of confluence, a lot of people try to pair up too many variables. For example, people who start to learn our systems and how we trade, one of the biggest issues is they try to line up, does it have an option flow? Check. Does it have a seasonal? Check. Does it have a technical? Check. And they go through everything, and then they're like, well, wait a minute, this one doesn't quite match, and then this one might give a different story. Just you'll naturally, organically come to decisions like I did. You can see none of this was forced, none of this was doubling back, and it's once you learn these strategies, it's very simple. It's okay, what is the context of the market? Right now, we're in a wave 4. So if we're in a wave 4, it doesn't make sense to buy any seasonal trades, right? We're not going to buy any seasonal trades because we only have one more leg down, right? So if we're to short anything right now that's based off seasonals, like you're not getting much out of it. So what is the best way to trade right now? It's probably just day trading, things like that, to capitalize off these small moves. How do we find small moves? RG charts and option flow, technicals, those 3. So that narrows down your search even more, and things like that. So hopefully that makes sense. But hard cut, I would be careful. Again, do not look for too many confluences. You see those clowns on social media with RSI, MACD, moving average. They have so many of that garbage BS. You don't need that. You can have it, but you don't need it. And I promise you that once you get good enough at actually understanding markets, instead of having a coping mechanism to tell you when to enter, like an RSI, like a MACD, that's where you're going to get. But I do look for confluence, but my confluence is in organic ideas based off a thesis that I craft. So you saw me tonight look at banks. You saw me tonight look at the most beaten down names like crowd, continuation, and cybersecurity names. Those names are going to be hot because it's just built off that thesis of what the markets are favoring right now. So there's not much to it. Sometimes even my trades take 5-10 minutes to find, max. Like sometimes I'm just boom right there. I already know what to trade. Okay, so hopefully that works. Do the pro members get access to the Discord? No. Demi, the Discord is a different thing, but I always say this to people: if you are serious about joining the Discord, we are not some alert spamming group that posts profits and goes crazy over all this money that we do that. We don't flex, we don't post profits, we don't talk about money. Our goal that we set out when I first was learning, so when I first met my mentor, Zach, I met him, sorry, I had to get this off. I met my mentor, Zach, in the Bay Area, and again, like I said, I sacrificed like my entire high school for this stuff. I convinced him when I was starting to do social media. I was learning with them for a while, and this was probably my beginning of sophomore year of high school. I wanted to be a doctor into freshman year, but they convinced me to just do finance and stocks. So I started to do this stuff, and they convinced me to start social media because they're like, well, hey, I forget how this conversation started. It was something like they were showing me a video, and I got frustrated. I was like, well, this guy has no idea what he's talking about. He's like, yeah, that's the point. That's why everyone follows them on social media, because they're clowns. And I was like, okay, well, then why don't I make a social media? Because you guys seem to be teaching me stuff that no one else knows, and I truly believe that I can make a difference and set a positive standard in the markets. So when I was going through that, I dragged them along, and it wasn't until about I don't know what year this was, but it was later that year that it would have been like 2019, 2018. It would have been that we created a Discord that I was like, hey, can you guys help me run a Discord? At first, we didn't make it public, and it was just free for a while. But as my following grew, we started to charge, because what was happening was, even, I had probably, my Discord was free until, this Discord we had was free until I probably reached about 80, 90,000 followers on Instagram, because there was record low participation. See, when things are free, it's weird. It's very weird. But when things are free, it is not a responsibility to those. And since our Discord is not based off of come tug your chicken and make money with us, it was come learn. We will teach you. We will give you that academic rigor. We will get you the courses, the PDFs, the video material, the discussions, the academic stuff, the market commentary. No one wanted to hear that for free. But as soon as we started to charge, that's when we actually attracted the right audience. And in a way, it makes it a responsibility for people to both show up, participate, but also remember to keep coming back because it is money, right? It's just like paying bills, and that's what we found. Weird social experiment. You can try it out, but that's that. If you are serious about joining, again, we have tons of material in here from us talking about the flow to live discussions like Zach is in right now every single night. To different, more complex material, different tool links, RG. This is how I scan the RGs. I use this entire list, just copy and paste, to different guides and of course the course catalog, which is a ton of very advanced material. That's that. But again, if you're serious about that, DM me on Instagram. The link is in my bio, but I can get you a discount code for 50% off. Again, for those that join my live streams, I do want you guys to be in here and participate, because it would make the live streams here go a lot more smoothly, especially and connect more dots for you guys. But what's the difference between, I get this a lot, what's the difference between the Rader Report and for example, the seasonal? The Rader Report is exclusively my perspective on the market that is organized with data and tools. The Discord is a combination of perspectives. So you're getting my mentor's perspective. You're getting other people's perspective. You're getting more of the how-to, the material, the PDFs, the things like that. But this specifically is just a product. It is a market highlight. And believe it or not, I think majority of our Discord members are members of the Rader Report, because it is a repetition kind of thing. Like they get the information from the Discord. They understand the thesis and they refresh themselves, but also see it from my angle in the Rader Report, because I take my time to vastly organize this stuff. So hopefully that makes sense. That is the difference between the two. Is it predicting forward movement? Ricky, all my reports are released every Sunday before the market opens for the next week or month. Yes. Do you go into detail about flow scanning anywhere? All the materials, PDFs. I mean, we have probably 3 or 4 PDFs in the Discord, just the overflow on how to interpret it, the settings, the website, even live discussions and recorded lessons with Zach and I from how to scan and interpret flow. Similar behavior to free trials for expertise. No skin in the game leads to low participation and success. Similar behavior to free trials for enterprise software. No skin in the game leads to low participation and success. Isn't that weird? William, yeah, it's very strange, man. Super, super weird. You would think that, like, hey, like if something's free, why wouldn't everyone take it? But it's so weird. It's just so, I don't know, man. It's weird human psychology. I don't understand it. Brother, think you might have just gotten caught a little on this bear trap, but I'm biased heavily long. You might have gotten caught on this bear trap, but I'm biased heavily long. Interesting. Well, Ricky, I would warn you that you concern me with saying you're biased heavily long. It sounds like that's an emotional response and not one backed by data or reasoning. So I would be careful, my man. All right, guys, with that being said, I hope you enjoyed everything tonight. Everything that we talked about tonight, remember that moving forward, the trades, Boeing, banks, things like that, discounted later this week, short into 16th, run up, wave 4, we're expecting that kind of stuff. Again, I will tweet this out later tonight. Additionally, for you pro members, I will update the charts for the Rader Report. Now, one of the things about the pro members is you get my indice charts every week. Even you can make a free account on the Rader Report and you get my SPY chart every single week. So you can just go in and log in and see my SPY chart with all the levels, expected range, and a summary for SPY. But every week I do tend to update these. I did not update these today because obviously we're gapping down massively, so there's absolutely no point in updating this because you have to let it open and see where it is. So I will update those tonight. But moving forward, guys, thank you so much for being here. I want to say that you guys are helping me help you. And also by being here, you are actively trying to, I see a lot of great participation. I see a lot of people trying to push themselves. And that's an environment I want to be in. So congratulations to everyone here. If you did participate, you did just chill out, whatever, listened, thank you for being here. I hope you did learn something. I hope my perspective on the market can influence you for the better. And I hope that maybe you see why this trading industry is so clapped and that I'm single-handedly trying to change it because there seems to be very little people that are attempting to do it themselves. So thank you so much for being here. I will see you guys later. I don't know when I'll be streaming. So I have to drop off my car tomorrow and then I have to leave for a trip on Wednesday. So it may be a Wednesday night stream. I don't know if the internet's going to be good enough. I'm going to be honest, guys. But I'll try to make it work. All right. So that's that. I'm going to be out of state Wednesday through Monday, but I'll try to bring my camera and see if I can't just sneak a stream off. But other than that, guys, thank you so much for being here. Sorry to be a buster. You're not a buster. Thank you so much for being here. And other than that, guys, have a great night. Bye-bye.